Thank you very much for staying with us. Here at the 19th Regional and Capital Markets Conference of the Jamaica Stock Exchange. And would you believe it? I have here with me a most important Jamaican, Dr. Damian King, economist extraordinaire. I dare say a director of Capri. And would you believe it? Chairman of Dequity Capital, one of the top local sponsor, the major local sponsor for this conference. Dr. King, boy, you're really a true nationalist.
Thank you very much. It's a pleasure to be here.
Absolutely great to have you. You know, I just spoke to a gentleman out of Guyana, and he said he's hopeful. A conference like this gives him hope for the region. You've looked at all the numbers. You know what the economies are like. You know where we are at. What say you?
The great thing about this conference every year is it really gives you the pulse at a level of detail on what is happening in the investment and business communities in Jamaica and the rest of the region. So you really get a sense that you know what is going on when you come to this conference. It probably is the most information you can gather about the business and economy and the financial arrangements in the region in 2.5 days.
Absolutely great. Now, you've been around, you've seen, I spoke to Greg Fisher last night. Greg says he's been in Jamaica since 90s. You, Dr. King, would have seen how Jamaica and the region has evolved, and especially our capital markets, has evolved over the last couple of decades. Where we're at now, how impressed are you with Jamaican capital markets and by extension, its foray into the rest of the region?
It is difficult to overstate what Jamaica has accomplished in the last 10 years. 10 years ago, we were one of the most indebted countries in the world. And while we were one of the most indebted countries in the world, with the highest per GDP, per dollar of GDP, the highest level of debt service in the world, we were still running large fiscal deficits. Now, normally, when you do a fiscal economic reform program, you set a path towards balancing your budget over 3 or 4 years. So then you can begin to get your debt coming down. Jamaica went from a fiscal deficit, that is to say, and having more expenditure and revenue of about 6% of GDP to a balanced budget in a single year. Through not particularly austere or burdensome adjustment, tax increases were actually only a small part of it, but through some really clever fiscal management. And we have had more or less balanced budgets since then, except for during the pandemic. And we have now put ourselves in a position where it is not unfair to say that Jamaica is one of the most exciting economic prospects in the world.
Absolutely. The Prime Minister last night spoke about the surplus. How important is it? The man in the street said, yes, I hear you on you're bringing down the debt. I hear you on the surplus. How important are these things?
You see, there is always a constituency who wants to dismiss these key measures, these key statistics as just statistics that doesn't actually affect people. But everything that affects people has to be monitored as a statistic. That's how you know.
Absolutely.
So the reduction in the unemployment rate from double digits down to 4.5% is about 150,000 persons who were previously unemployed now have jobs, now have an income, and that household has an income. And with 2.5 persons per household, think of, that is 500,000 households whose livelihoods have been improved. So it's not just a statistic. The statistic represents something.
It is real.
Let me make another simple connection. If you look at the number of streets that did not have working streetlights 10 years ago, compared to now, it's now a fraction now of the ones that, that didn't have streetlights a few years ago. And the reason for that is because the fiscal accounts were so strained, the government had so little discretionary revenue that they couldn't pay their JPS bill. So why would JPS go to the expense of repairing a broken utility light if they're not going to get a return on it?
They're in business.
It's a business, absolutely. So, and again, because of the fiscal improvements, which began 10 years ago, and I say that for a reason, because we have to credit 2 administrations for this.
Absolutely, absolutely.
Both parties for this. We now have a situation where the amount of money that is being channeled through PATH, the cash transfer program, for the poorest Jamaicans is more than twice what it was back then.
Absolutely. Dr. King, you've made some very important points. I want us to take a little more direct look, though, at the capital markets. And I'm glad you went back 10 years ago, because 10 years ago, we're just coming out of those adjustments where we had the government had to come back to the bondholders and say, look, we are in a little bind. Help us out here. And the institutions. And then, as you rightly say, we began that movement. And both administrations have been disciplined enough to stick to it. How you see that has helped our capital markets?
Okay, a couple of things about the capital markets. First of all, it's important that you ask a question about the capital markets because, when you look at the sectoral disaggregation of GDP, you're going to say fisheries and agriculture and manufacturing and tourism and finance, and it gives you the temptation that in the same way that, similar to how all men are created equal, that all economic sectors are equally important. But the financial sector is critical to an economy because every other sector doesn't depend on fisheries. And the same is true for many of the other sectors. But every sector of the economy depends on the capital market. For every sector to operate, it needs to have working capital. It needs to have investment capital. And the surplus of all of the sectors and households have to have a place to go so it can be made available to the investors. So the capital markets are critical. No country can grow without a broad and deep capital market. And that is a critical element of what has happened over the last 10 years. For starters, when the government was deeply indebted 10 years ago, and a large chunk of that was local debt in the local market, in the local capital market. So the capital market was financing the government, not investors. And more than half of the foreign debt was actually being held by local institutions. So here we have this capital market that private investors, even if they overcame the instability and uncertainty, didn't have access to sufficient capital because the government was usurping a lot of it. So one critical part of the debt reduction is the freeing up of investable funds to finance private sector, business, and economic expansion.
And that has helped us greatly. When we look at some of the projects that we've been able to undertake, so we're now talking about the Southern Highway project, and the government is saying, hey, we don't have to borrow all of the money to do this. We can finance some of this because there's surplus. That's a big one.
Absolutely. So, if you look at the fiscal accounts over the last 10 years, you will see that our governments have been able to increase capital expenditure quite consistently over that period.
Which will help to build out the economy and the GDP even more.
Indeed. So we are now in a virtuous circle.
Dr. King, what is the next step? So we've not only come out of that, while the world went through COVID and we saw a lot of the economic turmoil brought on by COVID, Jamaica was able to move quickly back to pre-COVID levels in terms of productivity and GDP. How would you say a strong capital markets would have helped us to facilitate that?
Well, we were saying earlier that a strong capital market helps all sectors and all activities. So a lot of companies that were more greatly affected by the shutdowns of COVID needed to continue to finance themselves until the economy started to recover. In the absence of a strong capital market, those companies would not be able to do that. And so therefore, the business and economic impact of the pandemic would have been worse. So the capital market provides that kind of insulation.
We've gone through after COVID, that period where we've been having interest rates increasing, tightening of policy with central banks pulling monies out of the economy and so on. We seem to be at the end of that cycle. Certainly when we look at what the Fed and the ECB are saying, we seem to be ending that cycle, and I'm sure BOJ here in Jamaica has held rates steady for a while also. Are we likely to see a reduction in rates this year?
We are likely to see reduction in rates, but a period of relatively high interest rates is not as big a concern as you might think. People tend to view high interest rates only from the side of the borrower. But there are two things we should bear in mind when we see interest rates go up. One, it motivates people to lend more. Okay, it's a market. There are two sides to the market. And secondly, it is part of long-term economic management. It is a part of long-term stability to make our inflation rate more predictable and stable over the long run, and therefore the exchange rate and everything that comes from greater economic stability.
And you were on record as one of the first to support the governor and the BOJ in raising interest rates when they did, and saying, look, this is a good thing.
It was kind of amusing that for years before that, the BOJ advertised, they literally sang about the importance of stable, predictable, low inflation. And everybody cheered them from the sidelines. And then when time came for the BOJ to back that commitment by raising interest rates,
people ran away.
Half of the society reacted with surprise, like, what are you doing? But that is what they said they were going to do. That we are going to defend low, stable, and predictable inflation, and that means using interest rates to make the adjustment. So they were good to their word, and thank goodness for that.
And we're now seeing the benefits of that. Dr. King, as we look to wrap, where do you see us going? We've done all the good work. We've built the foundation as a country. The capital markets are looking good. What's next for Jamaica?
So I like how you framed the question, because we are answering it within the context of the optimism that should come from fiscal improvements, monetary improvements, greater investment, and that greater sense of stability and optimism. So we have done most of what we can do domestically. But internationally, conditions are deteriorating. We now have global businesses trying to shorten their supply chains, coming out of the risk that they were exposed to during COVID. We have businesses that are nervous about the evolving United States-China deteriorating geopolitical situation and China's possibly taking a smaller role in the global economy. And that itself is going to be a concern. Then we now have many countries who are engaging in industrial policy to try to bring production that they would normally source overseas home. So for all of those reasons, we are kind of in a deglobalization period. Plus, we now have two international wars to create that sense of an increasingly fragile global environment. Then we have the prospect of the next president of the United States quite possibly being somebody who is going to take that internal focus to a higher level. He has promised punitive import duties on China, higher import duties all around, and restrictions on immigration, and that is going to trigger a slowdown of the US economy and a slowdown in the global economy. So the domestic situation looks optimistic. The international situation looks highly risky. And of course, Jamaica is going to suffer from that because we're a small open economy. So where that is going to play out, flip a coin.
Dr. Damian King, you did not disappoint. A man who is always on the ball. Thank you very much for joining us, and I'm sure we'll be talking more, absolutely, as we watch things play out in the local and the global economic situation. Great.